why did alternative finance come? What's the key thing? It really all goes back to 2008 when the global financial crisis hit. That's the real driver, right? The global financial crisis, where banks have been increasingly unwilling to finance small businesses. It doesn't make sense for them. It wouldn't make sense for them from a business perspective to give 10,000, 15,000, 20,000 to a business, right? Remember, from a bank's perspective, smaller loans means smaller profits. Okay, so for them, why would they give 20, 30,000 and invest that time and energy providing funds to a small enterprise when they can be, giving loans and lending and doing business with a company who has, a £5 million turnover, right? So clearly for them, it's a business question. That's the first thing. Secondly, after the financial crisis, there has been increased regulation for banks. Banks have been put under the spotlight because banks were, you could say, the epicenter of the global financial crisis, right? The systemic risk that manifested was partly based on banking activities, or you could say mostly based on banking activities, whereby we were getting these collateralized debt obligations. They were being securitized, being traded, insurance, you're insuring these. So it's affected the entire financial services and financial system. And so if banks were the epicenter, the regulatory regime after the global financial crisis came heavy on the banks. And it has really tightened what banks can do and what banks can't do. So therefore, it made complying with regulation more expensive and more time consuming. So that's the second reason why banks therefore have stopped servicing, or were not so interested in servicing, these small businesses. Okay, that it was very time consuming for them. And you can say thirdly, banks, because SMEs who want these kinds of small loans, they are more high risk. They usually have less assets, so the financing is unsecured. When it's unsecured, there's a lack of collateral, and therefore it's higher risk. And it's not in the interest then for a bank to enter such risky business. And so that's the third reason why banks, conventional banks anyway, were not so interested in having customers who are small businesses. And remember, when we talk about alternative financing, it's usually the small to medium enterprises which are going on such platforms and trying to raise finance. And then you could say the fourth reason why alternative finance has grown and has come is because small businesses tend to have weak cash flows. And therefore, it's hard for them to make a case to banks. It's harder. Whereas on a platform, it's easier because the nature of that platform is you're getting a higher return. Remember, when the banks pay very little interest to the depositors. Whereas on a crowdfunding platform or a platform where alternative finance is being arranged, the investors are usually getting much more for their risk that they've entertained. Okay, so it commensurates the return. So that's why you could say alternative finance has grown, and due to businesses having weak cash flows, banks have been unwilling to enter this space. And finally, the fifth reason why you could say alternative finance has grown is partly due to these businesses having poor credit histories, where it might be difficult for them to access financing from a bank because of their credit history. It'll be more likely and easier potentially to get financing through these platforms because the investors have that risk appetite, have that risk return profile, and would like that kind of return, would like that kind of investment, and they see it as a different asset class. And so it matches a number of, you could say, investment profiles for many investors.
Islamic finance learning made simple and memorable.